This is incredible. I'm getting it.
You getting what?
A stock.
What stock?
Welcome, ladies and gentlemen. Let's talk about Sofi Technologies Inc. We're going to take a look at the income statement, the balance sheet, the share price as well. We'll take a look at that real quick, but that's not the focus here on this channel right now. Sofi, you'll notice it is breaking down and going lower. It has been downtrending pretty much all of 2024 with the occasional pop to the upside on earnings. But if we switch to the monthly chart, even the weekly, you'll notice something very interesting. Very interesting here. What do you call that? That's called the descending triangle. When it comes to chart patterns, a descending triangle means we usually break down lower, unfortunately. And it's very interesting because look at this. It just can't create a higher high, but it is creating a lower high going right into this whole support zone, which has to hold in the coming weeks, or we will break down and go into the fives, which in my opinion might be a great idea to buy down there. And here is why. Let's switch over here to the financials. If we switch to the balance sheet, you'll notice the first thing we're looking at the annual, the book value per share as of 2023 and since 2021, the book value per share has been around the $5.50 range. Now, for those of you who don't know what that means, book value per share shows a company's book value per every common share outstanding to the fiscal period end. So, there we go. Wanted to get rid of that. So their book value, that's what we should be looking for in the coming weeks and months, is a share price of $5.50, somewhere in that area. I think that's where it's going to be worth. I'm not going to say it's going to be undervalued, but it's going to be, technically speaking, if we just go by book value, it's going to be worth a buy when it's at the book value. If we just go again, just by the book value. Now, if we look at the assets to liabilities, if we look at the assets to liabilities ratio, it's looking pretty good. 30 billion in assets, 24.52 billion in liabilities, and it has stayed that way for quite a while now. It has stayed in the billions, the 20 billions to be more exact. And quarter 1 2024, we had 31.31 billion in total assets. So that they're growing. The company is growing, and that much will be reflected on the income statement. As you can see here, the total revenue has been increasing year over year by 50 to 60%, and quarter to quarter, again, we've been seeing huge increases: 71%, 73%, 62%, 50%, 50% again, 82% way back in quarter 4 2022. This has just been a steady increase. And from quarter 3 2022 to quarter 1 2024, we've seen almost a doubling of the total revenue from 464 million to 908 million, almost a doubling. And here's the best part, ready guys? The cost of goods sold has stayed roughly the same, has not yet gone over 300 million. It has stayed in the 250 million range. So they've been keeping their cost of goods sold nice and cheap. If there was a chart here, and if there was a cost of goods sold chart, it would just be going sideways right now. Meanwhile, the revenue is increasing. That is what you would see if there was a chart. But I don't know if there's any charts that keep track of cost of goods sold or total revenue for stocks in general. If anyone knows, let me know. But just trying to imagine that. That's always good. Your company's growing, making more money, and you're keeping your cost of goods sold under 300 million. That's a win right there, which is going to lead to higher gross profit, which you can see reflected here. Higher gross profit. Operating expenses, again, have been going sideways as well. Operating expenses have been in the 250 million range as well. So it's again, company that's growing but keeping its cost of goods sold and operating expenses relatively sideways. That's a win. Pre-tag. What's the net income? Yeah, they're positive. on the net income. See, you know what's funny is their net income would not be positive if their cost of goods sold and operating expenses had gone up with the total revenue. Because I've seen some companies where the total revenue keeps going up, but their cost of goods sold and operating expenses also goes up with it, leading to them never achieving profitability. So this is like the best case scenario here. You get a company that's growing, but its operating expenses and cost of goods sold is just going sideways, which leads to a higher gross profit and net income overall. And I think that's it. I don't think I want to touch on anything else here. But moving forward, I would expect them to fall in share price because people like to overreact. Ultimately, on the charts, this stock loves to continue to create lower. It loves to have these run ups followed by dumps, run up and dump. But over the long term, it's been trending to the downside. And if it's going to achieve its book value, then we should see it under 6 in no time, especially because this again it did break down out of its. Let's go to the weekly. It is on the verge of breaking down here on the weekly, and if it does break down, like I said, we're going to 6 and under. And I know Anthony Noto did buy SoFi shares, I believe, at 650. Let me just look that up for you guys. But CEO Anthony Noto, I do have plans to potentially get an interview with him because I am interested that much in this stock and I want to know more of what the future holds for SoFi. But CEO Anthony Noto shares insider, yeah, there we go. Insider trading. That's what I'm looking for. Now let's pull it up here. Let's push this in. So he did buy the dip at, where is it? He bought the dip nice and cheap at somewhere right here. Here's where he bought nice and cheap. Let's look into the filing. And as you can see here very clearly, SoFi Technologies CEO, Chief Executive Officer, Anthony Noto, he did load up. A stands for acquired 22,500 shares. Total price at 650. So he bought the dip at 650 way back in, what date was it? Was it on the, where is it? Yeah, he bought the dip way back on the 21st of November 2023. And I remember that because I also bought the dip with him. And the stock went to what, $10? So it was well worth it's well worth keeping an eye on when he's buying and selling. He has been selling, as you can see, because this is the CEO. Wait, has he been selling? Why can't I view the form? Why can't I view the form? It's where's I'm looking for the name. So he's been selling. He's been selling. You know what's interesting is he sold on the 14th of 2024, March. He sold at 738. So he's been selling, huh? He's been selling, guys. That's very interesting. He has been selling up here. And then did someone sell here? Someone sold at 894 when it ran up. Was that him again? Yeah, Anthony Noto. Yep. So he's been selling. He sold the pop. He bought the dip and he sold the pop. So the whole point of this is keep an eye on Anthony Noto and see if he buys the dip moving forward, because he loves to buy the dip and sell. So let's see if he buys the dip around 650 and under. And if he does, I'm going to jump in with him. That is the game plan at least. And that's it for the video. As always, don't forget to like and subscribe for more Sofi content. I'll see you guys in the next one.